And we are live. JMMB Group Jamaica Elevate 7.0 Night 3. Welcome, welcome, welcome. Happy to have you. Come on in, log on, click, just come on right in. There's plenty of room in this virtual space for JMMB Group Elevate 7.0 2025. Yes, this is the 7th year of Elevate, and we're happy to continue to be the only financial institution in Jamaica that comes to you in January of every single year in a forum like this, giving you free financial education information that empowers you as you're in your new year goal setting mode to achieve your financial goals in the new year and beyond. So we're happy to be doing it all over again. Of course, some of us still miss the in-person engagement. We miss it sometimes too, but you know what? This virtual platform helps us to reach more people, not only across Jamaica, but indeed across the world. And speaking of across the world, please do what you normally do. Jump into that live chat. Tell us your name. Tell us where you are watching us from. If you want to share what big financial goals you're shooting for this year, then feel free to drop that too, because hey, everybody has something they're working towards. We're building community, and we're in a space where there is no judgment. We're talking the things, then we're breaking it down so that everybody has the information that they need. So let's jump right in. First out the gate, almost every single night since Elevate 7.0 began. Natalie, hey Natalie on YouTube. Good night, good night. How are you? Hey Natalie, tell us where you are joining us from. Dwayne, good night all. Dwayne called me Carrie Berry. Ha ha. Lot of people call me Carrie Berry actually. What's up, Dwayne? Welcome, welcome. Hey Raquel Shanique, ready for this topic. And another beautiful Carrie Ann on the live. Again, Carrie and James. So you know you're an awesome person, right? Yes, drop in, welcoming all my people from the different platforms. Instagram, them Instagram handles going to get me into problems, so I'll try not to call too many. But you know, like K Bello official, I'm just saying, you know, welcome. Just opened your investment account with JMMB. Welcome to the family. We are happy to have you. And of course, we continue to make it easy for you to join the JMMB family. Open your account, stay tuned. You don't even have to leave your work or your home, your office, nowhere. We'll tell you how that goes in a bit. Yes, Natalie from Portmore, welcome. Kirk from St. Catherine, Marsha from Barbados. What's going on? See, we're across the world. You know, you see, if we had the in-person, that wouldn't really happen. So we're very happy. So this topic is going to be a great topic tonight, guys. Let's just jump right into it. Guess what? Investing in real estate. But wait, before you click the off button to say, oh, this is the money people topic because I can't even afford an investment real estate property. Are you kidding me? Can I just at least try and afford my home? No, don't worry about it. Stay with us, because guess what? Investing in real estate is for virtually anybody who wants to invest. It's not just for people who can qualify for that second mortgage. And I'm not kidding. And we're going to find out what that is. So you want to stay tuned. If you have a minimum of 25,000 Jamaican dollars to start investing, you can start investing in real estate. Yes, I said 10,000 last time, but guess what? That's another unit trust fund. So don't worry, you can still use the $10,000. But for specifically investing in real estate, you just need a minimum of 25,000 Jamaican dollars. And we are going to tell you how to go about doing that and all the other strategies for investing in real estate that you can employ. So whether you can afford or qualify to get a second mortgage or not, this conversation is for you, because investing in real estate is really one of the great ways. It probably is one of the most underrated ways, in my opinion, that people can invest towards achieving their financial goals. So, you know, JMMB do it. We jump right in. We talk the things, then we give you the goods, and we're here. So, yes, continue to drop your name, say hello, tell us where you're watching us from, welcome you, and we will get started. Now, of course, our special guest tonight is another awesome JMMB team member. We've been speaking to fabulous JMMB team members since the start of Elevate 7.0. And tonight we have a gentleman. And of course, if you have been part of Elevate over the years, you know this man. You know that he knows things them. And you know that he's passionate about this thing called financial education and imparting the knowledge. Not only is he a JMMB team member, he is our Group Chief Client Investments Officer, right? But I think he also still teaches. Let's bring him up. Mr. Peter Thompson. What's up, Peter?
Hey. Happy New Year, Kerry. Happy New Year, Elevate 7.0. It seems as if it was like last year we started this, right?
Can you believe it?
Can't believe it.
Man, still going, still going in pandemic, out of pandemic, online, offline. We're still going. Thanks so much, Peter. Peter, you still teach?
Yes and no. I teach. I no longer teach at UA, but I do, extra lessons type of a thing.
Okay, nice. What you used to teach at UA?
Finance.
Finance. Okay, so there we go. Yeah.
Finance. Right.
Nice. So, and the extra lessons you do is finance to our maths, because I know people like me need maths extra lessons.
No. It's still finance, and it, as I say, I don't. It's not really a scheduled thing. Someone called me. Okay, I want to know this.
You make yourself available. Wonderful. Right. Well, yes. So JMMB keeping you busy, so you can't teach up at UA anymore, hush. But we are glad to have you. We're still gonna use your brain, pick your brain tonight. We just love the engagement online. Hey, Ingrid, checking in from Bull Bay in St. Andrew, Nassau, Bahamas, coming in. Late bloomer YouTube. You see how we have people all over Jamaica, all over the Caribbean, and up to yesterday, I'm sure we have some people watching from the United States and Canada. So yes, guys, continue to tell us where you're watching us from. And yes, Shanique, if you only have Jamaican $25,000 or 170 USD, you can start investing in real estate. So this conversation is just about for everybody. We're going to get started. We are excited. I have my list of questions, right? And so, Peter, first of all, just give us a level set and just tell us, what do you do at JMMB? What is your role? Because that title is a mouthful. Group Chief Client Investment Officer. What's that? What's your day to day?
Only at JMMB, right? We're excited about the names that we choose. All right. In a nutshell, right, I lead a team of investment professionals whose sole objective is to help clients achieve their investment goals. Let me even make it even simpler. I lead a team of people who get up every day and their job is, how can we help clients make money? Simply put, right? Now, making money depends on the actual client that we have in front of them. So the conversation, the unique things about each client, the strategy that we're going to be implementing each year, I kind of lead that whole conversation, liaise with research, risk, and we formulate investment strategy design for the time, basically. And we then lead the rest of the JMMB frontline in those conversations. So whenever you talk to a JMMB frontline representative, know full well that the conversation is a very robust one. It has been well researched. The feedback and recommendation that they have has gone through the rigor. And, my team leads that process.
Wonderful. So in other words, in layman's terms, you could say you do the heavy lifting on our clients' behalf where the investing decisions are concerned. So if at any point in time we have clients who say, boy, I don't really know what to buy, when to sell, when to buy, and all these things, you and your team of experts make it easy, make it accessible, and make it in the client's best interest in terms of managing those decisions and portfolios. So we appreciate you, Peter. Of course, we want to continue to welcome folks joining us. Hey, Anika. Hey, Audrey, checking in from Miami. Audrey, man, Una just missed the snow. I'm just saying, North Florida is snowing. Can you believe it? And Skeeter from Montego Bay and Patricia from Mandeville. Love it. So yes, guys, please jump in and say hello. So we're talking about investing in real estate, Peter, right? And as we know, on a conversation like this on the World Wide Web, we have those in the real estate investing conversation. While we set this tone and said that it's just about anybody can do it. There is a There is a more expensive way to do it than that, but it's for almost anybody who has a minimum of 25,000 Jamaican dollars, as we like to say, to invest. But let us start level setting and ask the question. Could you tell us, Peter, what exactly is investing in real estate? What is a real estate investment, and why is it even important?
All right, excellent. All right, so I'm glad you started out, Kerry, in terms of talking about the size of your portfolio, the size of your pocket in terms of investing in real estate. So, but off the bat, real estate investment is basically the process of how you either buy, sell, or own property for the explicit purpose of income generation or price appreciation. Basically, you buy, and as just like how you buy a stock and expect the value to go up over time, investing in real estate is you're buying real property, and you expect to either get income from that property or get price appreciation. So for the purpose of our conversation tonight, we're not talking about the house that you want to live in, your dream house, because that property is not expected to give you income, right? The purpose you bought it was not for you to generate income. You wanted to live your best life in your dream house, and so you are living in that, so we don't count that as an investment for this conversation. So in terms of why real estate important for your portfolio now, it's very, very simple. And I'm going to be talking about portfolio. And it doesn't mean that you have to be a multi-billionaire to have a portfolio. All I'm saying is you never ever put your eggs in one basket. You don't never ever invest in just one thing. You have a nice setup of different type of assets. So I know Leo Van is thrilled you guys earlier this week in terms of the equity, in terms of investing in stocks and different ways that we can invest in stocks. So stocks is a part of your portfolio. Bonds is a part of your portfolio. Real estate is a part of your portfolio. Now, what are the benefits of real estate? Diversification. And the fancy term or the highfalutin term is that uncorrelated with other assets. The long and short of it is that you want to own things in your portfolio that when other parts of your portfolio are falling, this one is kind of holding its own. So real estate offers that. So the equities market, all of us know that over the last 3 years, has not been so hot. Well, if you're in our equity fund, that's a different story. But in the general market for stocks has been down. Real estate, however, has been performing well during that period. So while one asset is down, the other asset class is up. So real estate offers that diversification. The thing that makes real estate goes up or down is not related to the thing that makes stock market go up and down. So you want a little bit of real estate to add that stability to your portfolio. And the big one that I'm saying for long-term investing, real estate acts as a hedge against inflation. What do we mean by that? The value of real estate will go up in line with inflation, or as inflation goes up, the value of real estate will go up. Now, over the last 4 or 5 years, inflation would have spiked and real estate values would have also increased. So, for those in the group of looking at real estate, you'll notice that each year it gets more expensive, right? If you thought last year was expensive, you look at it this year, it's even more expensive. It's a function of inflation, because inflation push up the cost of raw material to make the house or to make the commercial complex, and as such the value of that building will go up, hence the hedge against inflation. So we like real estate as a part of your portfolio because of the diversification benefits that it offers, and also because it's a nice little hedge against when inflation is getting out of hand.
Love it. Love that explanation, Peter. And then just a quick pause, just to say hi to Rob and Marva, who's also saying hi and joined in. Peter, I love that clarification because, as you say, first of all, when we talk about your investment portfolio, we're not saying that that is a rich people thing. What you're saying is you're investing in different types of assets.
Right.
Real estate or property is an asset, stocks is an asset, by way of an example. And so you wouldn't want to put all of your money investing into stocks, just like how you wouldn't put all your money investing into real estate, right? You
Correct.
do need to have a mix of different types of assets in your portfolio because, as you say, When the stock's not showing you any love, which sometimes happens, which we've seen in recent times, real estate could actually be the asset that continues to outpace inflation and give you the love that you need in your portfolio. So it's good to have that mix, and so it's important. I wanted to double back on something you said though, Peter, because I think it's something that we Jamaicans and even non-Jamaicans too, but since this is largely a Jamaican audience, we are a Jamaican institution broadcasting from Jamaica. Some people say, well, I'm investing in real estate because, hey, I have my home and I own my home and pay my mortgage, and my house is my investment. And it sounds like you don't necessarily 100% agree with that. Well, what are your thoughts on that, and what does that mean?
All right. So when I think of an investment, all right, that house that you have, are you getting income from the house? If you're not getting income from the house, then you're not. I don't see it as an investment. Investment needs to either be giving you back some form of income, or you're seeing appreciation in value in which you can take advantage of it. So, for example, you invest in your first house. 99% of people fall in love with the house. This is the first house. They get emotionally attached to it. An investment, you don't have an emotional attachment to it. You're in it not for the love, for the money. When for an investment, that wall, that's the first wall that she wrote on. You may not want to sell it, right? So for the purpose of our conversation, talking about assets and investing, we don't predominantly use your residence as an investment, because in terms of if you're supposed to sell it to take advantage of other opportunities, it would then dislocate how you live. So we predominantly don't like to use that as it. No, as a part of your overall net worth, this is an asset. Your house, depending on who you ask, some say it's a liability. I see it as an asset. It's an asset that you have, but I don't like calling it an investment in your overall portfolio.
I appreciate that distinction. So it's definitely an asset, right? We don't want people to think that we're not acknowledging that, when you own your home or you have equity in your home, it certainly is an asset as part of your overall net worth. But unless I guess you could say, unless you're probably using your property to generate income, because there are some people who live in a home, they may rent out the flat around the back, or they may rent out some bedrooms to students. I know of people who do that. My grandmother used to do that when he was of blessed memory. And it was an income generator for her. So I guess in those circumstances, you could probably say. But as you said, that emotional attachment, what you're really doing is when you talk about investing in real estate, is how is that investment working for you to earn, income, build your net worth, etc. It really is a great clarification to make. I want to acknowledge some questions coming in to the chat, because yes, folks, please drop your questions in the live chat. We appreciate the questions, because guess what? That's how we learn. And if we have time, we're going to get to the questions. So please drop your questions in. No, Peter, are you able to say, because I'm just acknowledging a question coming in from Instagram, K Bello Official, asking, would you say that there's like an average return on investment that real estate typically gives or has been giving over the last few years, to give some folks an idea of what has been going on in that area?
All right. So that's an excellent question. And the honest answer is that there's no universal measure, public, unbiased measure that says this is how real estate has been doing over the years. So just like in the stock market, you have the stock market index, and you can say it went up or down. This is a perform. We don't have that. What we do have, so any information I give is based on my sample of properties that we are interested in, locations that we're interested in terms of that overall performance. So commercial real estate, for argument's sake, which we have a significant amount of experience in, is that the revaluation as the increase in the price of commercial real estate, believe it or not, in US dollars, it doesn't go up by more than 3%, right? But the income on it, the income that you get each year from it is around 7-8%. So if you put that in the mix, adding the appreciation in the price of around 3% in US dollars and 7% on rental income, you're in a ballpark of around 10-11%. Now, again, location. Depending on the segment in residential, you could it double digit, but then that is a specific segment in a specific Kingston and its environment. That's a different mixture. So the commercial ones that we predominantly focus on, that is easy to invest, easy to actually structure investments around, I would say easily around 10-11%.
Gotcha. And that's good to kind of know that, every situation is different, as you said, depending on location, the type of property, that sort of thing. There's really no hard and fast. It's quite unique, I guess, to the individual investor, but that's good to know. Now, Peter, the big question of the night, because as I started out this live by saying that this is not a rich people conversation that we're having tonight, because yes, when we speak broadly about investing in real estate, yes, it does include the reality of people purchasing or acquiring real estate property to invest in, to earn an income off of, that sort of thing. So there are some people who buy commercial property, aka a place of business, a business place or office space, to rent and earn income from that. There are people who buy homes of various types, whether it's an apartment, a townhouse, a house, to rent out and earn income. There are people who will build on a flat onto the side of their house and rent out that. People will rent out their room. There are many different ways to skin the cat. But we started out by saying this is not a rich people conversation, because if all you have is 25,000 Jamaican dollars to invest in real estate, and Jim at JMMB, we're saying you can do that. So Peter, tell us how. What's the secret? The well-known secret.
The well-known secret. So no, you don't have to be contributing every month. You can start with 25,000 and that's it, right? No, we encourage you to, as a part of our long-term investment, you should be adding to your portfolio, investing frequently. However, you can do a set it and forget it lump sum, or you can have a structured payment each month, but you can start off with 25, and 25 is the only thing that's in the account, and it grows over time.
Peter, we didn't tell them what the name of the product was, I don't think.
So the name of it is the Optimum Capital Real Estate Fund. So
Optimum Capital Real Estate Fund. Break that down in English for me, please.
All right. So, and I'm glad that you gave me this opportunity. So there's two types of investing in terms of real estate: the direct investment and the indirect. The direct one is the one everybody knows. Everybody knows that you buy a little apartment. Well, you borrow the money, part of the money to buy it. You put on a down payment, and you hope that the rent is more than enough to cover the mortgage payment and put something in your pocket. So in direct real estate, you own it. The name of it is on your name is on the title. Indirect real estate is where you pool your money, and you and a whole troop of people come together and you're invested in real estate. You appoint an investment manager, and that investment manager manages the fund for you, or manage a pool of money. So Optimum Capital Real Estate Fund is what we call a collective investment scheme, a real estate investment vehicle. So we take everybody's $25,000, put it together, and there's an investment manager. The company is JMMB Fund Managers, of course, and the day-to-day, there's somebody assigned to be making investment decisions around that. Shout out to Amari Douglas and my team. He's the manager for the Optimum Real Estate Fund directly. So his job every day is to figure out, okay, money's coming in. Where am I going to be allocating this money? What properties are we going to be buying? And the model is simple for the Optimum Capital Real Estate Fund. We buy commercial properties and lease them out on long-term leases to corporate clients. That's what we do. That's the bread and butter core. So that provides a nice, stable revenue or income generation. Of course, every year you reevaluate, so the value goes up. We do have a part of the portfolio that is dedicated to, we do our joint venture here or there. but it's in we have one big residential project coming up that we're very excited about. Stay tuned on in the papers for that. But the idea behind it is that we're pooling all our small clients together, and large if they want to, and we're going to be making investment decisions. No, we're not. Here's the beauty of being in the Optimum Capital Fund or any collective investment scheme, real estate fund. You're not exposed to just one property. So based on our overall portfolio, we easily have north of 25 different investments in real estate, right, across different geography. So, if one tenant for whatever reason moves out, that represents a tiny percentage of the overall portfolio for that tenant. So we get that consistency of income coming in, and we're diversified across many different tenants, many different locations, because we're not putting our eggs either in one basket. So some of the popular buildings that you see, as a small investor, you technically owns a little piece of that. So in the indirect real estate investing, we're investing through one of these funds, and your name is not on the title, right, for the building. However, your benefit comes from the performance of that real estate or the different real estate investments that we make.
Okay, Peter, thank you so much. And I don't want to lose anybody. So let's start from where we're level setting now. So with 25,000 Jamaican dollars, right? You would invest it in the JMMB Optimum Capital Fund, which is a unit trust fund, or what you would call a collective investment scheme, where those funds are pooled. Everybody puts, all the different investors who invest in that fund, the funds are pooled, and those funds are used really to invest in different real estate assets, right? And then the return earned from those assets, of course, benefit the fund and those who are members. And of course, the price appreciation, because you're purchasing units in the fund, right, Peter?
Correct.
Right. So you're purchasing units in the fund at a particular price, and as the price moves up, then of course, if you bought it, say at X dollars per unit, so let's hypothetically, because I don't know what the most recent price is, but let's say you bought it at $10 a unit. If it goes up to 11, that's the difference that you would earn in terms of your return, right? In which case,
Correct.
That example would be 10%. So it is a unit trust fund. You only need $25,000 to get started in it, and you can start with $25,000. And what you also suggested, Peter, and I want to jump to a question we got on Instagram. Sorry, Instagram people, I'm not going to try and pronounce some of these handles to get myself into problem. But someone was asking on Instagram if you have to pay the 25K each month. Not necessarily. You start with 25K. That's the minimum you need to enter, 25,000 Jamaican. But you can add $2,000 a month if you want to, 10,000. Heck, if you can do 100,000, go for it. But the point is that you certainly can keep adding. You just don't have to add 25,000. You need that 25,000 to start, and you add, as you can, as you able, as you commit going forward. So it's the JMMB Optimum Capital Real Estate Fund. There's another question here, Peter, about is the fund only comprised of real estate investments, or there are other classes or asset types of investments in the fund?
All right. So the fund has a small amount of stocks, right? A small percentage of stocks. But the objective of it, so eventually those stocks will disappear, and those stocks, some of them are related to type real estate activity. But eventually, what is the fund will be 100% or 90% all real estate. We have a fund, if you want stock exposure, the optimal the income and growth is your fund, because that has just stocks. We have bonds separately, so you can pick your basket that you want. So how we designed it, we're designing it by asset class. So this one is just for the real estate overall exposure.
Great. Thank you for that clarification. So absolutely, by far, 90% real estate. There's another question here about, is investing in the unit trust Optimum Capital Real Estate, is it like buying shares where the more I contribute, the more of the property that I own?
All right. So
Great question.
So if you think about it, we all pool our monies together. Kerry and I, you're the first. You put in 50% of it. I put in 50%. You technically own 50% of all the properties that we buy. If I, for whatever reason, stop contributing and I just have my $50 in, and you put in more, you now have twice. You put in another 50, so we're now at 150 overall, and you have 100. So you have 2/3 of the fund. So you own 2/3 of whatever we buy. So no one person owns a property. Everybody collectively owns all the property that the fund buys. So as the fund grows and we buy more property, that those properties are spread across all the unit holders. Because technically, as I said, you don't own the property, you own units, but the price of the units go up based on the performance of the underlying real estate. So the price goes up when we buy a property and the value of that property goes up. Then the unit price will go up. In rental income coming in every month, each rental income we get, it pushes up the NAV. As we get more and more rental income, it increases the overall price. So that's how we perform. So the idea is that you are getting exposure to a whole portfolio of real estate exposure with a $25,000 that's diversified relative to, okay, you're just going to put all your eggs in one basket in one real estate residential property and hope that it stays rented all the time. So this allows you to diversify with a small amount of money, or as little as 170 US I saw somewhere, or 25K J, and invest across and I get exposure, I should say, to a wide array of investment properties.
Absolutely. And, again, just can't underscore enough the fact that this is really an opportunity for small investors to get a piece of the real estate investing pie. So even if, again, you can't afford to qualify for a second mortgage or any kind of mortgage to buy an investment property, you invest in what is really a collective investment scheme or fund that is used to invest in real estate. So you benefit from the performance. Now, Peter, there's another great question here. Hey, James from YouTube saying, so if he puts in 25,000, can we tell him what his interest earned will be per annum or what his ROI will be per annum? That's a very good question, because people go and say, how much interest me I go get? And it's a valid question.
All right. And someone once said, in terms of how it works similar to like a stock, right? In that when you buy it, what you're really expecting is to see the increase in the price that you bought in at. That's the essence. But so in order to project to say, okay, this is what you will quote unquote earn in 12 months, it's a little bit difficult. And here's why. So while I know that the properties that we have in the portfolio, I know that this is the value as at day one. The income coming in will add to that. So I can project, I can tell you that based on all of the properties that we own and the interest income the rental income coming in, just that alone, we should be getting X income. However, what if, for whatever reason, midway when we actually do our valuation, let us say one of the properties, the value actually fall, then that's a different setup. The vacancy cost, let us say I'm projecting to get 12 months of rent from tenant A. Halfway through the year, tenant A, for whatever reason, has to vacate. So that projection that I had at the start of the year will be a little bit off, because that income, we may not get to rent the property back until probably another 2-3 months. So it's not a precise science to say, okay, they are going to definitely get X percent. But what we do each year is that we project, and say based on the portfolio, we're expecting 78% return based on what we have in the portfolio today. And we try our very best to outperform that. What we do know though is that we structure the portfolio and the rental, the lease income such that it seeks to outperform inflation. So if you expect inflation to be X, most of our leases are tied or increase each year. So we know that the performance will be geared towards outperforming inflation.
Thanks, Peter. So essentially, we can't give a guaranteed return to say, yes, you're going to earn X amount of return over the next 12 months or even 6 months, 24 months. And that's really the nature of unit trust, because you're investing in assets that really and truly can appreciate or depreciate in value. We really can't give a guarantee. But what we can say is that, I mean, it's been performing quite well. I mean, Peter, can you give us, because there is a question here about historical performance of the fund. Can you tell us how the fund has been performing in recent times?
All right. So recent time, the 12-month return on the fund as in December, because people like to January to December type of thing. We did around 7.29%. Inflation was around 5 point some percent. So we outperformed inflation. The year before that, we did double digit. So there's no constant, performance. I say, okay, I'm putting my pot on fire for 10%, 12%, because things happen each year that may increase it significantly, or, but what we do know is that we don't expect to see it as volatile. So you see, like how you have stock performance, it go up, down every day. We don't expect that to be in real estate, because the value of the real estate is relatively stable year to year. So it's just those small things that can change the value of the property. In previous years, when we bought a commercial block and we sold it and we made a 20% return on that, that led to a bump up in our overall performance that year. In other periods where we don't have that big bump up, you're not going to get that big jump. But what we can, when we're projecting, we say, okay, we expect to earn at least the rental income. We calculate what the rental income is, plus what the price appreciation we expect it to be. And that's the wild card. What's the price appreciation? Because the total return is made up of the income that we're going to get from the leases and what the valuator says the building is valued at the end of the year. Combined, give us a total. If there's any change, if there's any change in that, then the performance will be a little bit below that. But in terms of performance, we consistently outperform inflation as stated in our mandate.
Thanks, Peter. And I'm glad you highlight that, because that's the thing too when we started out. And thanks, Carla from Facebook, reminding us that diversification is a big deal. And that's how we started out this conversation, that when you're talking about investing, you're not supposed to put all your eggs in one basket when you're investing, right? So you're not supposed to put all your money to invest in stocks, or all your money to invest in real estate, or all your money in bonds. You do have to have a mix of different types of investments, or assets as we call it, to make sure that you have a balanced portfolio that gives you less volatility in terms of what you're earning. And the truth is that stocks can give you some great returns when it's doing well, right? But as you say, some people unfortunately get salt sometime with the stock thing when the price go down and they thought that it was going to go up, and woe is me. But that's how the nature of stock market investing works. When it does well, it can do very well. Sometimes when it doesn't do so well, but at least real estate, if you have the real estate component in your portfolio, it gives you a little bit more stability, I would like to suggest, and stability, because that's just the nature of real estate. As we know, you don't necessarily earn a windfall from real estate necessarily. That's not the way it works. But a nice, steady, great asset, great addition to your portfolio. And again, with the real estate Optimum Capital Fund, you get the opportunity to invest in real estate with the JMMB team. And again, you sit back and relax and enjoy. There is a question here, because we spoke about, of course, when you buy units in the fund, Peter, and the price of the units appreciate. Have you ever seen where the prices of the units depreciate for this fund ever? Like how a stock price go down, this price for the units can go down?
It has. It has gone down because of nuances in the portfolio. No, and if for those in it, remember the fund from Capital and Credit days, it was originally, it had a large stock component. So over the years, we've been selling down the stock component to make it a true, clean, pure real estate fund. So the real estate component, that huge part that is real estate, doesn't really go down, to be honest.
Yeah.
In general, there have been cases in which one or two properties, the value has fallen, not significantly, but it is possible. But what also slows down the performance of the fund is rental income. If we have a period in which we're not getting rental income on some of the properties, it may go down slightly. So the Optimum Capital Fund is that slow and steady type of performance. And the price fall that I'm talking like day to day. If you look at it day to day, it may go down. And that could be a whole series of things that cause it to go down day to day. However, over a 1 year, 2 year period, 99% of the time is higher. That's the point. So over the long run, it has been going higher.
Yeah. And that too is the nature of investing as well. I always like to tell people there is a difference between investing and saving.
Excellent
so saving is when you put your money in a bank, either in a savings account or a certificate of deposit, where there is a virtually guaranteed interest rate, where they're going to tell you, okay, you're going to get 2% per year on your money, and you know you can bank on it. But guess what? It's 2% in good times or bad times. The beauty about investing now is that it does carry some measure of risk. And with that risk, you could go up, you could go down. But the beauty about it is that typically over time, over years, that is what investing should be, looking at a medium to long-term time horizon, there is invariably appreciation, growth, and more attractive growth than you would have earned in your traditional savings account. So there is room and a place for your savings account for sure, where you want that emergency fund, that sure money that you can call on when you need it. But when you're ready to know to say, look, I need to make my money start working for me, I need to invest, these are the things. And of course, that's it. Someone asked a question about dividends. You get dividends on this thing, Peter, like how you get dividends in stocks? It's a good question. I love the question.
It's an excellent question, and we actually have explored. So the short answer is no, it doesn't pay that cash flow. And the more in-depth reason why, we have looked at to say, okay, how we can actually pay it out. Now, the short answer to that is it may not be tax efficient for you to be taking dividends from it, because in terms of every time you pay a dividend, it's tax, right? 15% is deducted from it. So the question is, wouldn't you rather get that same money in the form of a capital appreciation rather than a dividend? Because if you take a dividend, it's taxable. If you take the same return in the form of an increase in the price, it's not taxed. So it's more tax efficient not to take a dividend. And it is something that we've looked at, examined to say, okay, for persons who want cash flow from it, what is a solution that we can generate or create that also has some tax benefits to it? So we're looking at that, but this fund does not pay a dividend because it's more efficient to actually you get your return in the form of capital appreciation.
Very good point. I love the point about tax efficiency because let's just keep it real. Not everybody wants to pay as much tax as they can. If we can find a way to be more tax efficient, why not? Why not? Let me just pause here and address a couple of housekeeping matters, folks. So first of all, thank you for joining this conversation. We love the engagement, right? We have another about 20 minutes left here. So please stick around. If you know of anybody who needs to jump into this conversation, please tell them to jump on. We'll be happy to welcome them. We are recording this session. Yes, we're recording it, folks. So if you missed the earlier part of the session or you didn't quite catch something, you want to replay it on demand, please be assured, rather, that we are recording the session and it will be available for viewing on demand whenever you like on the JMMB Group Jamaica YouTube channel. So you can check out JMMB Group Jamaica on YouTube. In fact, all of our previous Elevate sessions are recorded and hosted there. So if you want to go down memory lane or look at some other topics we would have discussed in years past, please feel free to check out the channel. But this particular session, last night's session and the session before, all of Elevate 7.0's sessions are being recorded and will be available right when the live stream ends on the JMMB Group Jamaica YouTube channel. Another important point, folks, we did drop a link in the chat that takes you to our website to give you more detailed information about the JMMB Optimum Capital Real Estate Fund. So there are, if you have some more detailed questions about the fund, you can click on that link. It takes you to our website where you can get more information. There is already some people saying, boy, how can I open an account? Now, guess what? JMMB, now you can open your account online. Woohoo! You don't have to drive, take bus, walk, take taxi to go to a JMMB branch. Once you have an internet connection and a secure device to access the internet, you can open an account online. Go to our website, jm.jmmb.com, or opening where you can easily start the process of opening your account online. There are some people who say, hey, I want to talk to somebody on the phone. Yes, we have licensed financial advisors through our client care center at 876-998-JMMB. That's 876-998-JMMB. They're opening the days, seven days a week. So give a call. If you can't get through, leave a message. We'll call you back. Not a problem. There are some people who say, boy, I still like to come into a branch and talk to somebody face to face. Not a problem either. And we make that easy for you too. Schedule an appointment. Yay! So you don't have to come in and sit down and wait and hope and wonder. You can go again onto our website at jm.jmmb.com where you can log on. You go and you see our schedule an appointment icon. Click on that. It takes you to our appoint scheduling tool where you can choose the nearest JMMB branch to you or the one that's most convenient. And you can choose a mutually convenient date and time to come in and to have your financial planning conversation. Our team is always happy and ready to welcome you to talk about not only the Optimum Capital Real Estate Fund that we're talking about tonight, but maybe there are other things you want to discuss because yes, JMMB Bank, we do mortgages. We do mortgages for your home. We do mortgages if you want to buy an investment property. Big up to all the people who can do the second mortgage. We're not judging. Big up yourself. We do mortgages, JMMB Bank. So you can talk to one of our advisors, one of our loan officers, and have that conversation and start the application process when you come in and visit. But if you want to just open your Optimum Capital Real Estate Fund account, your unit trust account with your 25,000 Jamaican dollars, you can do that on our website, jm.jmmb.com. And we dropped a link to get more information about the fund. So say no excuses, guys. You know, we are win in 2025, no excuses. We are going to win and we're making it easy and accessible for you to do so. So, you know, I had to pay some bills, drop all of that information. And yes, we always get the question, I live overseas. Can I open an account with JMMB? Yes, you can. We got family all over the world. And that is why online account opening is not only convenient for those in Jamaica who may not want to, who may want to do that from the comfort of their home office, wherever. But if you're overseas, you can open an account via the online account opening tool as well. So no worries. We make it easy. We make it accessible for everyone. And yes, if somebody here wants to speak to a mortgage officer, yes, check out our website, jm.jmmb.com. Schedule an appointment and come in and have a chat. Or if you want to start the conversation on the phone, you can call us at 876-998-JMMB. That is 876-998-5662. Here's another question, which is great. Hey, Melanie wants to open an account for the children. Can you purchase like a unit trust fund for your children, Peter, or it has to be in your name as the adult, as the investor?
Correct. It has to be in the name of the adult. There are cases in which you can tag on the person as a minor, but we require the adult on it.
To be the primary person. Excellent question. Thanks, Melanie. Melanie and Katie Ann wants to, or Kadeen, my apologies, wants to know how to buy stocks online. JMMB Moneyline or the Moneyline app. You know, so we have an app. You can buy stocks, sell stocks. You can apply for IPO, initial public offering, all JMMB online via JMMB Moneyline. Once you open your JMMB EMMA account, equity money management, money market account, you can also open that online as well. Somebody asked if it's the same requirement for opening the EMMA account. I'm not quite, I believe it's a similar requirement, but don't take my word for it. You can definitely open it online. So once you open your EMMA account online, which is our stock brokerage account, you can buy and sell stocks. So just a sidebar note, because I know we have a lot of people love stocks. JMMB is the largest retail stockbroker in Jamaica. So we know a lot of people love us for doing that, and we're happy about that. So absolutely so, absolutely so. All righty. Okay, so what I will do is that, so Kadeen, if you're a client of JMMB and you're open your EMMA account, then we ask you to contact us to make sure that you have login credentials for JMMB Moneyline. So you have to open the account online so that you can make sure you have your brokerage account. If you don't have your Moneyline login credentials, because you need username, password, setup, and everything, please contact our client care center at 876-998-5662. All right. Yes, Yamfoot from YouTube. You see, when you come with these new handles, going to get me to problem. Yamfoot says the Moneyline app is great. Waiting for the portfolio report feature. Stay tuned. Stay tuned. There are so many features coming. In fact, we're just launching some new ones this week too. So keep staying tuned. Later will be greater. All right. Thank you so much. Now, question here, Peter. Another question here. When I open my account, so I open this Optimum Capital fund and I start with my $25,000. Is there a minimum time period that I have to stay in there before I can pull out?
All right. So the short answer is that there's a 90-day holding period, right? In which, but after that, there's no minimum holding period. So we know that some of these unit trusts, they have like long 5-10 year, 3-year locking period. We don't have that locking period associated with us. So once you get through that initial 90-day holding period, you should be fine.
Right. And that's great to know. And again, of course, we're not telling people to just pull out after 90 days because, again, investing is really ideal for the medium to long term. But we do appreciate the question because some people wonder if, suppose I go in today, I can come out tomorrow. Is there a minimum period in which I need to stay? And ideally, of course, the longer you're there, the greater you can benefit. So that's a great question. Thank you so much from Instagram. All right. So there is a question here, folks. We did do a live stream 2 days ago on Monday about investing in stocks. It was an awesome session. We had easily about 1,000 people join us for that. Please go onto our YouTube channel, JMMB Group Jamaica, to check out that live conversation where we went into everything about investing in stocks, including our EMMA brokerage account. So you can get all the information there. Watch it at your leisure. And of course, share it. If you haven't liked this video, guys, if you haven't liked it, please like it. Subscribe to our YouTube channel. If you haven't already subscribed, click the notification bell as well to make sure that whenever we come on with great content, you don't miss a thing. Now, another important thing, guys, as we wrap up this conversation, because we have about 10 more minutes left here, tomorrow we are going into our 4th and final session for Elevate 7.0. But guess what now? Tomorrow we're talking big people things. I mean, every night we're talking big people things, but tomorrow is going to be a very, very interesting discussion. And the reason why I am raising it, folks, is because sometimes when we hear the topic, sometimes we think, boy, is bright people topic that. But hear what now? We are going to be talking about Jamaica's economic outlook for 2025. And I don't want to hear the collective groans in the virtual internet chat, right? The reason why this topic is important, guys, and we want you to come and hear, is that guess what? We can't put our head underneath a rock when we talk about the economic outlook of Jamaica, because guess what? The economic outlook is important because as investors and as savers, as people who have our own financial goals, we need to know what the experts are saying with respect to what's coming down the pipe for the economy, if there are any opportunities that we can position ourselves for, right, Uncle Peter? Or if there's anything we need to prepare for. So please don't miss that conversation. We're going to have another one of our JMMB experts coming on to speak about the economic outlook for Jamaica. We may even touch some international stuff. You never know. I mean, the United States going through some major changes right now. What does that, if any, impact does it have on the Jamaican economy, so that we as investors and savers can be ready to take advantage of the opportunities that may come our way, or to protect our investments if there's anything we see coming down the pipe. So trust me, people, you want to join us tomorrow, we'll be here. All right. Now, Peter, let's just jump back into the last question or two here. Are there any common mistakes, Peter, that people make when investing in real estate? I mean, I know we've been talking a lot about the Optimum Capital Fund, but, whether you're investing in real estate through a unit trust or even in your own property directly, are there any mistakes or that we need to be aware of so that we avoid them altogether?
All right, definitely. So the first thing, as an investment, people think short-term with real estate investment. Don't know why, but they do. The traditional thing, when they do it directly, is that they're going to buy the property and they're going to pull out their Excel spreadsheet and maths out, say, okay, the income coming in from the Airbnb, we're going to rent it for 15 days out of the year, each month, and we're going to pay the mortgage, and we're going to get all of this excess. So they forget about all the maintenance costs associated with it. Things are going to break down, the total cost of ownership. 9 out of 10 times people forget about those other costs associated with the investment. So the total return on investment, they're not factoring in all the costs. Second thing is that people also concentrate their investments in a property. So to your point, when you take out $4 or $5 million as down payment on a property, and then the objective is to rent it out and get income, you've just allocated a big chunk of your money to just one property. So anything that happens, if there's a downturn in the area, for whatever reason, the rental income is not coming, you've exposed a big chunk of your portfolio to that one space. So they're not diversified. So we see that happening a lot with people owning real estate directly, thinking that it's easy money, quick turnaround, not thinking about it long term. And then secondly, not factoring the total investment required to make it work. Over time, a building is going to deteriorate. You need to maintain it. How much money did you spend in operating, maintaining the building? Did it? And when you factor that in, are you making a return? So the fix is, if you have enough money, if you're very deep pocket, then you diversify into different properties. For the average person, a pool investment vehicle, a unit trust, a real estate unit trust works to alleviate all of those issues. You think long term with real estate, and then secondly, all of those issues around maintenance, all of that is factored in. You don't have to worry about those nuances associated with it. You have an expert team of professionals doing all of that heavy lifting. You're just in it for the returns on the portfolio. We see, so those common mistakes is not factoring in all that is required to make a return on investment.
Absolutely. And I'm glad you raised those mistakes and even the risks associated with it, Peter. And again, it's one of the reasons why investing in a real estate fund like what we're discussing here tonight is great, because as you said, it takes away some even of the headaches. So not only is it more accessible for people with smaller sums to invest, but still would like to benefit from the returns of what can be gained by investing in real estate, but also without the headache. You don't have to turn landlord. I mean, rig up to all the landlords out there, but not all of us have the fortitude to be a landlord or property owner, investment property owner, to deal with, as you said, the leakage and the roof one fix and the tenant issues and blah blah blah. Question, sidebar. What is a REIT, a real estate investment trust? How is it the same or different to what we're discussing tonight?
All right. So the legal definition of our real estate investment trust. So it's an actual legal structure. It's predominant in America and US. So a REIT by definition. So let me first talk about the similarities. The similarities are you are pooling your money with other small investors and you're buying units in the REIT, similar to what you buy in a unit trust. A REIT is you can have a REIT that is publicly listed. So a REIT trades like a stock on most US stock market. So Kingston Property is it says it's a REIT, but the legal definition of a REIT is that the REIT by law has to pay out X amount of its earnings on a quarterly or annual basis. So so it's not, so the dividends, quote unquote dividends that come from a REIT are set. If you earn rental income of $100, you have to pay out 90% of that as dividends back to the shareholders. So that's its pure definition. So we don't have REIT legislation in Jamaica, so we don't have what are real REITs. But internationally, they have them, and these REITs are traded on the stock market, so the price goes up. So they're much more volatile in terms of the price movement rather than a unit trust where the price changes based on what's in it. In the stock market REIT, the price move when somebody change their mind about what the interest rates in the world will be, and that affect REITs. While a unit trust is not publicly listed, so you don't see that lot of volatility in the price.
Very important distinction, Peter. Thank you so much. Final question for you, Peter, before we wrap with some final thoughts and information. Are there any resources or tools available that can help people with real estate investing in Jamaica that you're aware of and can share with us?
All right. So as I said, so we oversee real estate managers, right? So there are three resources that we have. So if you're investing in real estate, you need a real estate broker as your friend. So the broker agent, they have access to data around what's happening in different areas, what's the prices in different areas. So they have that information. So you need one of those persons in your back pocket or on your team. Secondly, if you're not going direct real estate, you need a investment advisor to tell you what's happening in either REITs or unit trust space in Jamaica. And then thirdly, in Jamaica, if you say, or you're going to be doing real estate investing, you want to go out there and do it yourself. So NLA has data, every sale that has ever been done.
That's a National Land
Agency.
National Land Agency, NLA. Thank you.
So that's data that we use. I can tell you what the house in your area was sold for. What's the average sale price? So that gives us information to help us be better at doing what we do, managing or making money from real estate. So it is a lot of hard work, and this resource is not free in terms of the National Land Agency data. But because we're managing billions of dollars, that cost is insignificant to the overall impact that we're going to have on the portfolios. So you need a broker, you need an investment advisor, and if you want to do it yourself, you need data on sales, and National Land Agency does an excellent job on that.
Awesome. Thank you so much, Peter. This has really been a great conversation. Peter, I did say that was the last question, but I just want to sneak one more in there because some people may even still be asking the question, Peter, how do I know if investing in real estate is the right option for me? How do I know that?
Oh, yeah, but you answered the question at the top of the hour. Everybody needs to have some real estate in their portfolio. It is just how did you get that real estate exposure? I add a little bit to it and say, okay, if your investment objective is medium to long term, you need some real estate in your portfolio. And the second question I have, do you have real estate in your portfolio? If the answer is no, you need real estate in your portfolio. And again, it's because of that benefit that we spoke about at the top. It gives diversification. So when other asset classes are going down, the real estate will be nice, slow and steady. It's not going to perform as big as or well as stocks, but it's not going to drop as steep as stocks. As a matter of fact, it's normally very, very consistent. So real estate should be a part of your portfolio. It's just how you get that exposure. And to really answer that question, you need to sit with your advisor and kind of work out what your plan is, and then formulate a strategy. Are you going to go the direct way and try to get a mortgage and buy a house for yourself or investment property, or are you going to use the simple way and invest in Optimum Capital Fund?
And as you say, slow and steady. So can I assume that folks in retirement, is it a good investment for folks in retirement or getting ready to retire?
So the reason I pause, because person in retirement, they want income coming back now. And based on how the fund is set up, it doesn't directly pay dividends or cash flow. So if someone in retirement, they would have to sell each year. They say, okay, I want some money. So they sell some of their units, take the gain, and they invest. So and I make it again. Real estate should be a part of everybody's portfolio. Just how much and what type.
There we go. That's a good clarification, because we do always get that retirement question, and we appreciate it because people are at different stages of the financial journey. So we want to make sure we're answering questions. Peter, this has been a great conversation, and I just want to wrap with some final information for everybody who's listening. So first of all, guys, we want to thank you for joining us on this live, and just some takeaways from the conversation and important information. The first thing is this session was recorded. So if you weren't able to join us from the very top, maybe you were multitasking and never caught everything, we did record this entire session, and it's going to be available as soon as this live stream ends. It will be immediately available on the JMMB Group Jamaica YouTube channel. It's our channel where we have it chocked filled with all kinds of recordings and videos with financial information, but certainly Elevate 7.0, all the Elevates actually, but this year's Elevate 7.0, all the sessions that we've done so far are there, recorded, ready to be watched on demand. Please like this video. Please subscribe to our YouTube channel. Hit the notification bell so that you don't miss any sort of video uploads that we do with great information that you need. Elevate 4.0 continues tomorrow. Tomorrow will be Thursday, the 23rd of January, 2025. It's going to be our final night of Elevate 7.0. You don't want to miss it. We're going to start 8 p.m. sharp Jamaica time, where we'll be here for just about an hour, just over an hour. And it is going to be one of those topics you don't want to miss, because guess what? We're going to be talking about the economic outlook for Jamaica for 2025. And no, you don't need rum or liquor for that conversation, because guess what? We are going to be talking some opportunities. We're going to be talking some things you need to know to manage your money and prepare yourself to still win, because we're winning, we're winning no matter what. And with every situation, there's always an opportunity. As I like to say, sometimes it's good to know what's coming down the pipe so that we can prepare our finances for any eventuality. So you don't want to miss that conversation. It's not a bright people conversation. We're all bright. No worry about it. Just come and you'll hear about the outlook, and then we're going to translate what those outlook points mean for you as you plan towards your financial future in 2025 and beyond. So please join us here tomorrow, Thursday, the 23rd of January, 8 p.m. Jamaica time, streaming still on all of our platforms. We said that also we've been talking mainly about the JMMB Optimum Capital Real Estate Fund. You can open your own online. You don't have to come into a JMMB branch if you don't want to. You can open it online. Go to our website, jm.jmmb.com, where you can open an account online, and then you can start the process there. Nice, easy, from the comfort of your home office. Once you have an internet connection and a secure device, you can get the process started. You can open also your stock brokerage account. Some people gave that. We did a stock brokerage session on Monday. Go to our YouTube channel, JMMB Group Jamaica, watch that session as well. So we make it easy for you. Some folks say, look, I want a mortgage or a second mortgage to buy an investment property. We do that too. schedule an appointment. Go to our website again, jm.jmmb.com, to schedule an appointment to come into your nearest JMMB branch at a mutually convenient date and time to have a conversation, a financial planning conversation. If you want to talk about investing in real estate or investing or savings in general, or if you want to start talking about how do you apply for a mortgage, please reach out, schedule your appointment to have the conversation. If you want to start the conversation on the phone, we do have licensed financial advisors in our client care center available, can be reached at 876-998-5662. They're open usually most hours of the day, daytime, 7 days a week. So please call and start the conversation there. We're happy to have a chat with you. And we look forward to engaging with you and making it easy for you to start on your journey or to continue on your journey and on your journey on the road towards achieving your financial goals for 2025 and beyond. So this conversation has been about investing in real estate. Peter, I want to thank you so much for your nuggets. We really appreciate you as always for giving us all the information that we need. JMMB Optimum Capital Fund available to be opened online. Folks, if you have any direct questions for JMMB, feel free to drop us a DM or you can email us at info@jmmb.com. Tomorrow, Thursday, 23rd of January, 8 p.m., we're going to be breaking down Jamaica's economic outlook for 2025, the opportunities that we see coming down the pipe, things that you need to do to prepare to win with your finances for 2025 and beyond. So until then, everybody stay safe and all the best. Cheers. Thank you very much, everybody. Bye.
Bye.